Whenever we go in and we price out loans, we don't just put in your credit score and say, oh, your rate is a 6.5, or put in your credit score and say, oh, your rate is a 7%. There are loan level pricing adjusters known as LLPAs that help us determine what the interest rate calculation is going to be. Those LLPAs involve your credit score, how much money you're putting down, the loan amount. It may be the property type, the use of the property, like is it going to be investment property or is it a primary residence, a myriad of things. However, what we're going to address today is only two factors. One, your credit score, and two, how much money you are going to put down. First, I want to address over the weekend, this information seemed to have been everywhere. And I was a little bit confused because I did a video on this a couple of months ago. This is not anything new. This is not new information. If you have already applied for a home loan, you have already seen the impact to your interest rate. This is not new. This is going to officially go in effect for loans that are going to be sold May 1st. If today is April the 24th, you're already under contract, you are well on your way to the closing table. We've already made the adjustments for you. This is not anything that's going to make your interest rate go even higher. For those of you that are not under contract yet, and let's just say, for example, you got pre-approved at a particular rate 2-3 months ago, you may see a slight change for the better in terms of your closing costs if you're somebody that has a lower credit score. This is in no way, shape, or form supposed to hurt people that have a higher credit score or more money to put down. The idea is it's just going to narrow the margin to make it more accessible and more affordable for those that don't have as much money to put into the transaction as others might. Secondly, and the most important thing that I want to convey to you is that this is not a reason for you to suddenly stop paying your bills to, tank your credit score so that you get a quote unquote better deal. It's just not true. So if you hear anybody saying anything like that, please let them know that it is absolutely important to make sure that you are paying everything on time and having the absolute highest credit score possible to make sure that you have a seamless process in attaining home ownership. So I want to make sure that you understand. So I want to show you a visual of pricing and LLPAs, which is the loan level pricing adjustments that I just mentioned. This is something that we are used to seeing and something that you've probably never seen before. So it is color coded just so it makes it a little bit easier for you to read. Don't get overwhelmed by this, but hopefully it will allow you to understand what those changes look like and who those changes impact the most. The FHFA has lowered the adjustments for short, basically, LLPAs, I'll just continue to refer to them as that, on lower credit and lower down payment customers. And they have raised the adjustments for higher credit and larger down payment customers. As you see here, the chart shows you different buckets. So the buckets in red are paying more on their mortgage, and the buckets in green are paying less. And the buckets in white have no changes at all. So yes, you can see that a higher loan to value, lower credit bucket on the bottom far right has improved the most. This creates an opportunity to get more would-be homeowners into a home. This will allow someone that has only $15,000 to shift some of the money that they're putting toward discount points to get a rate at all to go toward their down payment, or even allow them to just continue to hold on to their money. So basically, somebody with a 6.5 interest rate that has a lower credit score, as it has always been, let's say, for example, they were paying 2 points. Okay, so 2 points on a $300,000 house is an additional $6,000 that person is being penalized. Someone getting that same interest rate with a higher credit score may not have had that $6,000 quote unquote penalty that they would be charged toward closing costs. So do you see how it makes things a little bit more accessible and a little bit more affordable to people with a little bit lower credit score? We're still going to explore all of the options and opportunities to make sure that homeownership is affordable to everybody. This may mean that you don't get a loan. Excuse me. This may mean that you don't get a conventional loan at all. And the FHA option may still be the more affordable option or opportunity. But because these home prices have gone up considerably over the last several years, more and more people are starting to see that they need a conventional loan to be able to get into the purchase price that they need to attain home ownership. The purchase prices of conventional loans tend to be higher than the loan limits that are placed on FHA. So, hopefully, this has helped you a little bit in your understanding. But I want to stress to you, this in no way means that somebody is getting a quote unquote better deal with a lower score than with versus a higher score. It just means that comparatively speaking, that same person that would have gotten a loan this time last year may have less discount points or closing costs that they have to pay to get into the home. Okay, so let me give you a general example. So on a conforming loan amount with 20% down and a 780 FICO score, before the new LLPAs went into effect way back in February, you may have received, say, a 6.5% interest rate. Using those same rates and changing the adjuster, that same person would now be at a 6.75% rate. So about a quarter percent higher. Let's look at somebody with a 5% down and the 5% down with a 640 FICO score. Before the adjustments went into effect, they may have received a 7.5% rate. So a full point higher than the person with the better credit. Today, because I said we are only trying to narrow that gap, they would receive a 7.25. So only a half point higher than the person with the better credit. So just to summarize, the loan level pricing adjustments are not new. They've been in effect for a while now, and they are here to help and not hurt. You will not see a spike in interest rates in the coming days or the coming weeks that are related to this. If the interest rates spike, it's going to be because of something outside of what we're talking about today. There's also not going to be a drop in interest rates for someone putting down less money with a lower credit score versus somebody with a higher down payment and a higher credit score. Second, and this is the most important part, I want to put this to bed now. There are no circumstances where a person with a lower credit score is going to have a lower interest rate than the person with a higher credit score. Please pay your bills. Please, please, please. So I don't want to argue on if this is a good thing or if this is a bad thing or, pros and cons and all of that. But the goal for everybody should want other people to be able to attain home ownership. It's our goal, certainly. We don't want to lock anybody outside of the opportunity to make their lives better and the lives of future generations and allowing them access to build generational wealth. This is only to try to level the playing field a little bit because things are significantly more expensive. I probably said it about 6 or 7 times in this video. We only want to make it more accessible. We are not trying to steal from the rich to give to the poor. We're not trying to penalize someone with a higher credit score to have a higher interest rate than someone with a lower credit score. We're only trying to provide a better opportunity for access. Hope everybody understands. If you don't, I completely understand that. If you want to talk about it in the comments below, I certainly do welcome that. Let me know if you are interested in attaining home ownership. I'm more than happy to go over your scenario with you. In this incident, if you were pre-approved a year ago and your closing costs were astronomical and your credit score was a little lower, now might be the time to reevaluate that to see if it's something that's more affordable for you. Interest rates are starting to tick down, so you may find that you have a better interest rate, lower closing costs, and the opportunity to really get in the market because things have slowed down a whole lot and home prices are leveling off. I look forward to helping you. And if you want to see other videos that are around these topics, my playlist is available for you to go over issues with your credit, to talk to you about assets and getting money for your down payment, as well as talking to you about other pertinent issues on my Mortgage Boss Talk Tuesdays. So I look forward to hearing from you soon and assisting you with your homeownership journey. Have a great day.